I see something like that happening. And when that does happen, that means that the end game is really days away. And then people will start piling into gold just because, not because they want gold, but because they want to get rid of dollars. That's going to be really the end game switch. When it's not that people want in their mentality that they want gold because they imagine, let's say 5 years from now, gold will go up from 2,000 to 2,500, and then, they'll sell it and then they'll be able to buy this boat or whatever it is in dollars or shekels. When they start to buy gold, not because they want to profit in dollars or shekels or euros or yen, but they're starting to buy gold just because they don't want the dollars. They want as few dollars as possible. They just want to get rid of them.
Global investment firms like Morgan Stanley are bullish on gold equities as demand for the precious metal is rising. Central bank purchases may have a hand in that bullish sentiment. That's because purchases in 2023 could exceed the previous year. According to FX Empire, uncertainty continues to cast a shadow on the capital markets as 2023 winds down, which will only bolster demand for gold and ancillary services that support the precious metal industry, like mining. Rafi Farber of Endgame Investor predicts a dollar-to-gold shift as a hedge against devaluation, foreseeing gold backwardation within a year. The US dollar has lost about 3.4% of its value annually since 1970. Gold, on the other hand, gained 7.8% per year against the US dollar. While central bank money loses value every year, gold increases. That's why the yellow metal is so attractive. He believes a potential trigger for the Fed intervention could be a failed Treasury auction. Thursday, a disastrous auction of 30-year Treasury bonds sent long maturity yields soaring as investors demanded additional compensation for funding a ballooning fiscal deficit. An hour later, Fed Chair Jerome Powell told reporters at the International Monetary Fund conference in Washington that another interest rate hike aimed at curbing inflation is still possible, unleashing a surge in short-term yields. Furthermore, Farber asserts banking turmoil as he singles out Bank of America and Morgan Stanley, while emphasizing the benefits of holding gold and silver. According to market experts, the U.S. banking crisis in early 2023 and the global economic slowdown and geopolitical tension are some of the major reasons that gold and silver beat stock market returns by a huge margin. Now, we present the clips of Rafi Farber's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I don't know if what's going to cause the Fed to come in is going to be a failed Treasury auction or just a really bad one with a bid to cover over one, but just not very scary, so the Fed has to move. We've seen this happen before in the repo markets. So it happening, remember in September 2019 when repo rates went to 10% from, what was it, like 0% a few days before, because something went wrong in the plumbing, they call it. The difference between that and a failed Treasury auction is just a matter of maturity. It's the same thing. I see something like that happening. When that does happen, that means that the end game is really days away. And then people will start piling into gold just because, not because they want gold, but because they want to get rid of dollars. That's going to be really the end game switch. When it's not that people want in their mentality that they want gold because they imagine, let's say 5 years from now, gold will go up from 2,000 to 2,500, and then, they'll sell it and then they'll be able to buy this boat or whatever it is in dollars or shekels. When they start to buy gold, not because they want to profit in dollars or shekels or euros or yen, but they're starting to buy gold just because they don't want the dollars. They want as few dollars as possible. They just want to get rid of them. And if you can't buy gold, so fine. You go to the supermarket, you buy whatever's on the shelves. So that's hyperinflation. That's when gold is no longer sold for any amount of dollars, and that's gold backwardation. That's the end game. And I see it happening at some time in the next year. The entire banking system is a crisis because it's inherently insolvent. The question is, when is it revealed? So I think I talked about Bank of America, and I looked at their balance sheet. And they have all these mortgage-backed securities that are underwater, and they have these unrealized losses. I think it was Morgan Stanley, one of the big banks. Yeah, it was Morgan Stanley, and they have the biggest exposure to something called ESG debt. ESG debt, I forgot what it's called, environmental social governance, right? So it's basically like this left-wing rubric that a company has to have a certain carbon footprint or something, then they get a loan. And like none of these measures have any economic meaning because they can't be measured. How do you measure someone's carbon footprint when you haven't even done anything yet? It's like, okay, so they put a number on a paper that they estimate, and then they get the loan. Then what? Like, does the business succeed? Does it fail based on these environmental metrics? None of it makes any sense. So they have all this exposure to this debt that makes no economic sense. And then, oh, well, that debt's going bad now. Well, look at that. Amazing. So they're stuck in that too. The thing is, like, it's not really the woke movement. It's not anybody on that team. It's like just the direction that the country has been going in, making loans that make less and less and less sense because the government always guarantees them. So that's what these big banks are stuffed with, which is why their stocks are going down and down, and their equities are their equity values are falling through the floor. So all it's going to take is a rush to cash, where people just take out physical cash from their banks, and there's a big run on the dollar, which would probably be in a deflationary financial crisis right before the Fed steps in. There's enough time for people to take cash out of their bank accounts, and then that would force the big banks to, let's say, sell their assets at a loss in order to fulfill the withdrawal request so people can have their physical cash in a time of crisis. Or let's say they shut the banks down and they don't allow anything until the Fed acts. Either way, the dollar is going to be dead, because either in one scenario the banks are going to be dead, and the other way the dollar is going to be dead. Either way, gold's going to skyrocket. So exactly how it happens, whether these banks die nominally or whether they survive nominally but have no assets of any gold value, doesn't really make a difference. We know where they're going, and either way, if you hold physical gold or silver, you'll be good.
Rafi Farber also foresees a shift as people realize the necessity of physical gold and silver amid depreciating fiat currencies. The bullish outlook comes as safe haven demand drove gold prices briefly back to $2,000 an ounce. The precious metal is currently testing important support above $1,950 an ounce as geopolitical fears start to diminish. In a report published Thursday, British research firm Capital Economics said it sees gold prices ending next year at around $2,100 an ounce. Meanwhile, he advises using silver in the endgame and favors gold for wealth preservation afterward in a new gold and silver-based monetary system. Analysts expect a gold rally because investors' interest in precious metals is expected to revive. This will also positively impact the rest of the precious metals. And a gold rally should be on the cards if the U.S. yield curve turns bullish and the Fed decides to ease. Let's get back to the interview.
The average person who is interested in gold isn't thinking, well, there's going to be hyperinflation tomorrow, which at one point that's going to be the case. And it's going to catch a lot of people flat-footed. But they're thinking, well, I would buy gold because I have some extra cash now. This is what the average guy thinks, because we've been off the gold standard for long enough that people don't make the connection that gold is money. They think that gold is a hedge against what they call money losing value, so that at some point they can sell their gold to get a profit in shekels or a profit in dollars, so they can use those dollars to buy more stuff. That's not how it's going to be. Okay, that it's going to be that shekels and dollars and all these fiat currencies don't work at all. You're not going to be able to buy anything with them. So the only thing you're going to be able to buy things with are the gold and silver that you actually physically have. People haven't made that switch yet. So they still run towards cash in a time of war. So when did they run towards gold in a time of war? It was a time when the dollar was gold, like in the 30s, 40s, like in World War II. The gold in Fort Knox started to rise precipitously, or in the early 1940s around World War II, because more and more people were running into dollars, which were backed by gold by $35. So the more dollars that people were crowding into, the more gold Fort Knox had to have in it. We're not in that yet, but that's going to change. And when is it going to change? It's going to change when there's a sudden financial crisis in the middle of war, and people see that their dollars or their shekels or their euros are losing value so fast that everyone runs to the gold retailers as fast as they can. And that's when we're going to see just an explosion. It's not even going to, that could be when gold just goes no offer. It's going to happen that fast. And that's what I'm worried about. This is a rule of thumb that I use. We often see with silver during monetary crises, there's this huge peak. There was one in 1919, there was one in 1968, there was one in 1980, one in 2011, but it doesn't last long. Imagining that you are a perfect market timer and you'll be able to find that exact peak and sell, and you won't be, haunted by Did I get the exact top? Did I not? Blah, blah, blah. So just for practical purposes, you're going to want to dishoard your silver around that peak, like as it moves up to that peak and as it falls down from that peak. And then as you use it to, let's say, buy groceries or buy a car, or even buy a house, you could, something like that, then you would get a good average of finding that high. And once the end game happens, and once the dollar is no longer a currency, gold is going to find some kind of peak, and then it's going to drop off a little bit and then just hang out at that new plateau. What we saw from 2000 to 2012, let's say, like gold went up and up and up and up and up from 2000, and then it went down a little bit, and then it didn't get below 1045, whatever the low was, and now it doesn't seem like it's going to get below 1900 again. Maybe it will briefly or something like that, but gold goes up and then it finds a plateau. Silver goes way, way up and then falls a lot farther and then finds a much lower plateau. Why is that? Because eventually there's a new gold substitute and people would rather use that than physical silver because it's easier. So I would say if you're trying to get through the end game with the best monetary metal, through the end game itself, and use money during that crisis, you're going to want silver. After the end game and after we reestablish some kind of functional monetary system based on gold and silver, either gold or silver or both, I don't know exactly what it's going to look like, then the gold is going to reassert itself at some level that is not at its high, but not as low, but much closer to it than silver will, because people want to use gold substitutes and they don't want to use silver unless they absolutely have to. So that's why you want basically gold for wealth preservation after the end game and silver for emergency monetary use during the end game, because it will be much more valuable than gold during the crisis.
At best, banks hold only about 10% of all customer deposits as cash. The rest is invested in government bonds and other assets. This has some risks that could fuel the gold price in the coming months. The US dollar would lose enormous value due to a significant drop in demand. Gold would increase significantly in value due to higher demand. The increase in value against the greenback would be robust. How does your perception of these precious metals align with potential shifts in the monetary system? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.